Hello and welcome to another episode of Fintech Focus TV with me, Toby. Today I am absolutely delighted to be joined by John Cragg. John, how are you?
I'm well. Pleased to meet you, Toby.
Likewise. And listen, really interesting times for you and the MYHSM team. Founded in 2018. Tell us a little bit about what's going on in the business and what you guys do.
So basically, Toby, here at MYHSM, we are a management company who offer fully managed payment HSMs to the fintech and financial world. As you say, formed just over 18 months, 2 years ago now. Basically, we saw a number of things going on in the world, which was leading us to the conclusion that the world needed to move from on-prem to as a service, the financial world, that is. Back in as far back as 2007, 2008, when I was back at Thales, banks were making statements like, we need to focus on banking. We're not IT companies. We need to focus on our core business. Back then, the world really hadn't embraced cloud. And obviously the financial world, having been very secure, wasn't really ready for that move. I had some interesting meetings more latterly where I was meeting fintechs, and we were about to loan them some equipment, some payment HSMs, so that they can do some development work on those. And the question for me was, well, where do you want these boxes delivered? And they said, well, we don't know. We don't actually have an office. We're virtual. Yeah. And I'm sitting there going, how's this going to work? You want us to ship £30,000 boxes to your house? It's like, not sure that's going to work properly. So, there's that. And then there's obviously the open banking mandates, which was aimed at encouraging fintechs, the growth of fintechs, and breaking up the monopolies after what happened back in 2007, 2008. And I guess one of the problems that we saw with the fintech space in support of open banking was, just like our colleagues over at MyPinPad, the cost of actually setting up this business, setting up a new service or application is huge. Yeah. And the addition of having to buy payment HSMs, put them in a PCI, PIN and DSS approved environment, hire the experts who are going to run them. This huge amount of capex that's required was a big barrier. And we just sat there and looked at it and went, well, we can do it a better way. We can really hopefully help to offer fintechs a really low cost entry to online payment HSMs to develop the application. And then once you've done that, once you've proved that the application works with the PayShield the way you want it to work, then you can move to our fully PCI PIN and DSS approved service, again, on a what I called like a mobile contract, pricing wise. You pay a setup fee, and then depending on your data utilization, your fees go up. So as you start off, it's really low. And then as your business grows, you can increase the bandwidth and pay more money. So it really helps those guys off the ground.
I think it's we'll come on to a lot more about that, because there's so many things that I want to explore in just what you said so far. Mm-hmm. But I want to touch first and foremost, and this is sort of a brilliant paradox that you're sort of in. You've got a business that started up 18 months ago, and in many ways, in terms of where the market is pointing, you've got this sort of perfect sort of situation with the sort of rise of open banking. Mm-hmm. You've got a huge focus on security and a boom in the payments market. You're seeing rapid digitalization, but at the same sort of time, you're hit with one of the biggest economic crunches in history. Yeah. Yeah. And so what a combination to sort of collide in the middle. Tell us how you're faring with that and what it's meant for the business.
So it's been really, really interesting. I've worked in big manufacturing organizations like Thales and Cabletron way back when. So I've always worked for the vendors, which have been established businesses. So you always had a track record and things to gauge against. As a startup with a brand new sort of concept in an existing market, it's quite difficult. So you put your business plan together and you watch your sales up and down and progressing. It is fair to say that everything was progressing really well. on track, not a problem. We hit late July, early August, and then we had a bit of a slump, and it's like, we're not sure what's going on. And I kind of separate our market into two main elements. You've got your fintechs and your startups at one end, and then you've got your big tier one banks at the other end, just to simplify it. And we have great traction at both ends. It's fair to say we've not won business at the tier ones yet, but we are starting POCs this month with 2 tier one banks, which is fantastic news. But all our success so far and the wins that business we've won from all corners of the world have been with fintechs. And the reaction we were getting from those guys who we were talking to about going into our test phase was, we're going to have to put things a bit on hold because we can't get into an office, or we've got problems on funding. Because all the fintechs were obviously, they were looking at people to invest in them, to pay for the development. And people were sitting back going, where actually are we? Plus, we're in the middle of the holiday season. I'm really happy to say that as of the end of August, beginning of September, things have really picked back up again on track. So I think COVID is both, I've got to be careful how I say this, it could be seen as a blessing in some ways for us, because as you say, it is changing how the world works. I've spent probably on average 60% of my working life traveling and in hotels. I haven't been near a hotel since March. It's fantastic and it's really effective. You know, we are embracing online, we're doing meetings, and I don't see it as a problem. So I think businesses are more efficient, and our T&E has just dropped to nothing.
Yeah.
Travel expenses, I remember in January, straight after the Christmas break, jumping on an overnight trip to the US to have a 1-hour meeting with a big vendor. It was a nightmare. Not how I wanted to start the year. Good meeting. Didn't enjoy the overnight red eye back from Atlanta at all. So that's good. The other thing it is doing, again, it's accelerating online retail and the fintechs, because people don't want to touch things anymore. You don't want to touch POS terminals. You don't want to put your PIN into somebody else's device. Again, that's where my PIN pad and other new applications are helping us stay more distanced and hopefully changing that as well. So it has been a challenge. Obviously, financial institutions are looking at their cost, their spend, their investment portfolios. So I think some fintechs are struggling with access to cash now and investment. But I'm hoping that as we get used to what is becoming the norm, that will have to pick up again.
It's interesting you say that, because I've been speaking to a few people around the VC space, and that appetite is definitely returning. There was a natural, triage that sort of came through, and real focused, tightening of belt, so to speak. But I think people are recognising exactly what you said. Look, there's this very, very interesting sort of thing where people are sort of almost, you can't say for all sorts of reasons, humanitarian amongst the primary, that this is that there's positives within this. You understand that, but for the industry, and having spoken to people, 60 plus people now on these shows over the course of the last few months, invariably people have done a tremendous job, and I think it's worth celebrating that. I do, about the sort of the improvements in how people are looking at their businesses. I said yesterday that Reed Hastings put something very interesting about the 2001 bubble, where he took his headcount from 120 to 80 and got the productivity above 120 with those 80 people. And now with 8,000, they're keeping that lesson, and it was called their sort of road to Damascus part of it. And when you're there and talking about sort of travel and entertainment expenses being cut and squeezed, and the sort of lunacy of I've heard people at some of the major banks going out for half-hour meetings in New York and flying back. The toll, both in terms of physically on senior executives and their time in terms of salary just being taken up in aeroplanes, plus of course the economic impact of that sort of an environmental impact of it all. just sort of means that there are certainly pluses that can be taken out of it. And I'm glad that's something which is coming into your business.
And we are going to embrace that. Sorry, Toby, we are going to embrace that, because all those years I spent on aeroplanes and hotels, you know, you jump on the airplane and it's loads of people like me. The hotel's full of people like me doing these meetings, and you fly back at the end of the week and go, you know, that's just spent upwards of, like, I don't know, £7,000-8,000, and there's like thousands of you doing it. And I know it's bad. It's bad for retail on the high street, what's happening. It's bad for airlines. It's not going to necessarily be good for hotels. But you say fundamentally, the environment is what has to be looked after as well here.
Yeah.
And if we can do it a smart way, as we're doing here on a great Zoom call, you know, we should embrace this technology, and we should not, I don't think, just ease back into the bad old ways.
And there's shifts as well. That there's sensationalist headlines for me about you know, the you know, cuts here, and we've seen Pret taking cuts back. But we've also seen the headline behind the headline is, you know, Co-op increasing by, you know, 50,000 staff and all this sort of stuff. Amazon taking on 7,000 more people in the UK. It's shifting parameters which aren't quite as headline worthy as the job cuts.
No news is good news, you know.
Exactly. But I think that there's a really interesting piece there. Look, we're seeing that in the business, and very clearly from you, it's you know, it's an evolution of the business that allows you to, you know, to probably be a better business for many reasons. Yeah. But also, I think there's an interesting piece here about just how you how you PR how you market your business. I think is really interesting. I looked at some of the words that adorn the sort of LinkedIn pages and the website and such, like secure, scalable, hosted, payment, cloud. The only word that wasn't a sort of high impact buzz on those was in the secure, scalable, hosted payments in the cloud. Payment hardware security modules. We look at reducing cost, embracing cloud, focusing on core business, allowing you to focus on your core business and managed services. This is just one of those businesses that absolutely gets it, as far as I'm concerned, in terms of value added to the customer. Every year we do you know, some awards in our magazine, The Financial Technologist, and that looks at the most influential businesses for the year ahead in the financial technology space. Those, and then that's judged independently by the likes of Lloyds, Barclays, we have Beringa in there, all these EY businesses there who are looking at these and pushing forward their nominations for some of the most dynamic businesses in the space. When I come back and I get the feedback and I talk to the judges around that sort of stuff, you're looking at companies that make it easy for their customers. You're looking at companies that reduce costs for their companies, for their customers, and increase time. And you're looking for innovation around technology. 3 big boxes that you guys are ticking. Tell us, is that just fortuitous that's what, you know, the sort of service you provide, or has this been, yeah, I think we used the word before, the perfect storm for you?
I think it's both, you know, and I have to say, our marketing lady, Jade Emmanuel, joined us beginning of the year down in Cardiff, and without a great deal of help and support, although she works closely with the guys at Sky Parlour, and we appreciate that, she has done a stunning job at marketing our business. And you know, in a world when you can't go and do events and you're not leaving your office, talking about something that in a lot of ways can be really quite boring and staid, talking about payment HSMs, how do you make that sexy and get it out there? And she's done a great job in getting it out there. But it's true, you know, what we're doing is we are absolutely fundamentally supporting the move to cloud. We're attacking the cost. So you take a payment HSMs. They were designed many years ago, payment HSMs, to sit within a bank's brick wall, secure environment enclave. Our first thing was to look at it and go, well, how can we put this in the cloud and make it shareable and therefore cost effective amongst a group of people? So our shared payment service now, payment HSM service, enables 9 different clients to share a resilient, compliant, secure group of 3 pay shields. So we've massively brought the cost down. We've put it in the cloud. We don't use cloud when it comes to the payment HSMs because you can't put a payment HSM in the cloud. You can only put it in what we would call a secure data center, and then enable the cloud to actually access it as and when it requires to do so, because the payment HSM really isn't. It's really difficult. None of them are designed for cloud use because they haven't evolved enough. They can evolve very quickly, but I don't think the manufacturers want to make them cloud ready just yet, because they haven't figured out how they're going to make as much money if they do that. But we'll talk about that another day possibly. So what, if you think about it, what is happening is the payment application is migrating to the cloud, AWS, Azure, Google, IBM, whoever the cloud provider might be. And we're working with the cloud aggregators, your Equinixes, your NTTs, and basically we put our payment HSMs in the data center with direct connectivity into any of the cloud vendors. So as the likes of ACI, they're wanting to move their customers to as a service. So as that application moves to the cloud, we can then put the payment HSM in a data center, direct connectivity. It's all then virtual for the bank. All the bank or the fintech has to worry about is, how much capacity do I want? What's the application? How much capacity? And our pricing, as I said earlier, will change based on the utilization. So again, banks, I think, are going to be really slow to move everything in this way, but I'm confident they absolutely will do it, because if we'd have had this conversation 7, 8 years ago and said, will the bank ever move its databases or its office to the cloud, people would have laughed at you and said, are you serious? But that's the way it goes. I think that this is a pure inevitability now.
Yeah.
It is just like all technology now, a time for people to get it, properly look at it, properly evaluate it, and make the right judgment.
Yeah, this speed of evolution, I think, is timely, and if we look at legacies from all of this that have helped, all of the devastation that it's caused, both economically, socially, personally, etc., there's been significant improvements into process from a business perspective that I think can be the sort of fuel for recovery. And most of that is around, I think we'd have spent a long time, it's been years and years and years waiting for finance to really adopt cloud technology. And we've had breakthroughs, but it's been a while, right?
Yeah, and hopefully the open banking will start having this, the 2000 crash, then the 2007, 2008 financial bubble, maybe COVID again, bad though it is, maybe it could be a catalyst to push some more of this innovation. Again, my colleagues at my PinPad, the technology is brilliant. Just imagine being able to use a standard Samsung or Apple and use it as a full-blown POS terminal. It just removes all that headache for the small merchants of buying those expensive devices. Having it, you can do your two-factor authentication using the My PinPad application as well. And the fraud, the amount of fraud on cardholder not present payments is eye-watering. And I still struggle with the idea of why the schemes and the banks haven't got a more usable two-factor authentication solution for online payments. 3D Secure has never worked well. They got a huge drop-off during that authentication process, but coming out with some ubiquitous solution that everybody's comfortable with that works to tackle that fraud could be massive for us. But I struggle with I really don't understand why it takes these financial organizations quite so long to change and embrace this kind of stuff.
Well, that's the $1 million question, isn't it? But and it's the same with procurement. And I think, look, when you've got massive bureaucratic organisations like that, there's an awful lot of consequence, and that consequence creates fear, and that fear creates paralysis, and that's always been the case. No one wants to. It's the classic IBM quote, isn't it, about no one gets fired for hiring IBM. It's the same thing about no one gets fired for keeping the status quo. And I think that sort of entrepreneurial drive that's seen the sort of massive advance in fintech, and why fintech's been able to do that so quickly as a movement and being quite so prevalent, is because of the paralysis that you see in institutions that sometimes stimulate that sort of innovation. And that's why I'm so excited to see certain business. I always look at Citi when I think lead the pack when it comes through from this, who've embraced innovation and I think probably if you look back 5-10 years ago, you saw an awful lot of is it fintech versus the banks, and now the banks have actually used it and collaborated and recognised its sort of ability to bring this in, which brings up actually a very interesting point that we were talking about a little earlier on with regards to open banking, with the big boys still sort of being a little bit of a handbrake to this, and doubts and fears probably still surrounding some of the sort of fintech movement and whether it actually can become mainstream. Throw open your thoughts on open banking, because I know this is another soapbox opportunity for you.
Yeah, absolutely. Open banking, I fully embrace it. I think what open banking brings to what was a really sticky, difficult, closed shop, it was a great idea. But I'm not sure the governments have enough clout or are wielding their clout to force banks to get to where they should have got to. A lot of banks still haven't got to compliance with open banking. A lot of them are still 10, 12 months away from achieving it, because for the banks, it's all cost with zero upside. There's very little for them to gain here.
Yeah.
And they're really dragging their feet. They really are. And until they've all embraced it and achieved it and delivered on the mandate, then it's still going to be a drag for the fintechs to accelerate and grow as quickly as they can do. And again, maybe now is that perfect storm moment where people are spending more time at home, are doing research, looking at stuff, and everybody is getting more tech savvy. Look at online shopping. How many more people now know how to do an online shop that had never done it before? So as people get more tech savvy, using the home computers, they're hopefully going to start investigating the financial world and go, actually, I don't have to do everything through my bank. There are alternatives here, and there are cost-saving opportunities out there. And I think that banks will eventually get there. I think it will happen. But as I was saying earlier about the trends, it is this Luddite mentality where people just want it to stay the same as it is because they're comfortable, they're making lots of money. Why do we want to upset the apple cart?
So with regards, this is an interesting sort of aspect as well, because I see both sides of the argument here. One of which is, COVID has been, a positive for the major institutions because it's deemed as safer, similar to gold for example. But then, and when we've seen sort of more pressure coming around some of the challenger banks in particular, Monzo, I think probably most notably, in the press of late, it probably creates a little bit more panic. So whilst we're talking about this sort of speed of digital innovation, we're also looking at this sort of trust factor. Yeah. And trust to me is the key to financial services, and why the major banks have always had that stranglehold. Is because of just the pure trust that people are able to put into it, particularly with 2008 and Iceland and everything that we saw around, that went on there. How's that balanced out, and how does that still, create that confidence for open banking to come up and build that trust in a what will always be, particularly in the UK, I think, a skeptical community.
Yeah. So I think that this is where the PCI Council comes in for me, and maybe there already is. I mean, there are obviously standards. Maybe we need to see more utilization of BSI standard flags or PCI flags for these open banking organizations. But for me, where MYHSM plays a part, and I've tried engaging with some of the standards and we have engaged with PCI, that's absolutely the case, but I was meaning more the schemes. So it's the schemes that fund the PCI councils. That's my belief. So I've written to some of the schemes and said, well, look, what we're actually doing is trying to offer this service to all these fintechs that we offer at a really attractive price, which ticks all the boxes, to make sure that these fintechs out there who were struggling to get their product off the ground, struggling with cash flow and finances, and end up cutting corners. And that's not good for anybody. What we aim to do is tick all the boxes. We only offer a fully compliant service. We don't move outside that. We cannot afford to do that. So we offer the full resilience. All our users are geographically spread across at least 2 data centers across 3 payment HSMs, and it is all fully PCI, PIN and DSS approved, and we adhere to all the standards. And it's funny because some gentleman responded to a blog that we did a few weeks ago. I think it was on Finextra. And he came back and he said, a really interesting article, and we like what you're doing, but all your assumptions are based on the fact that the fintech is going to stick by the rules. And I kind of read this with interest and said, well, yeah, because frankly, if you're not sticking by the rules, you can go and do anything you want. And I think any fintech out there, and we know they exist in quite often, who builds their business on a non-PCI compliant service, have only got one pay shield, so single point of failure, and sometimes their people don't fully understand how to manage that box and haven't put it in a proper secure environment, are just opening all their clients up to risk. So I think that what we're doing is to maintain the highest level of standards and deliver it at a price which is attractive. So they don't have to cut corners. They can tick all the boxes. And to me, it's a no-brainer. But there again, I guess I'm a bit biased.
Well, it sounds to me like you have every right to be with what we're talking about, because that sort of I mentioned the word trust before standards ties completely into that. If you look at being able to build that trust, drive the standards, maintain those standards, and see no the sort of erosion within that, then embracing open banking seems like a natural way forward, which with again those core tenements of the customer in mind, and cost reduction and ease of service being the sort of driving force behind everything in there. Yeah, I'm really interested in this business of yours, because it's right in that sweet spot, and having navigated hopefully the worst of everything that we've seen so far.
For all our sakes, let's hope we've navigated that.
and thriving through that, and continuing to evolve and develop as a business is hugely admirable, and what a set of cards to be dealt at the start of a business. Tell us what comes next. Tell us what's exciting about the future of the business and how you grow it from here.
Well, the exciting thing that is taking many hours for myself and my fantastic team is the expansion. We have in the next 6 weeks to open up instances in Singapore, North America, and Europe. So we are looking at either Amsterdam or I think Frankfurt for Europe, definitely Singapore, and luckily Florida probably for North America initially, because that's going to cover LATAM, because we already have customers down in Asia, in Latin America, in North America, and obviously the UK and Africa. So all of it's being covered currently from the UK, and that's working really well. But as we move into more latency sensitive application areas, we're going to have these data centers closer to home. And in support of the sudden massive expansion in my PIN pad, we're going to have to support customers out of Brazil, India, North America, and Asia. So we've got to get that done in the next 6 weeks. The amount of work that is required for our very nimble, very clever, but perfectly formed team is phenomenal. So I'm pitching in, I'm doing all the purchasing, and the guys are getting on with scoping out all those data centers and getting everything in place, because again, all the compliance means you can't just ship things normally and do whatever you want. everything has to fall in line with exactly our specifications. So it's a job, it's a task, but we'll get there, and that's really exciting at the moment. And again, if these 2 tier 1 banks in Europe go well through the POC phase, we hope this year, by the end of the year, to have great uptake from the fintech. But if we can win these tier 1s, then that really, really puts us on a road to success, because nobody really wants to be the first. Getting that first over the line is really incredible. And again, Darren Busby, my head of sales, ex-guy at Compass Plus, has again done a fantastic job. Our ecosystem, working with the big application vendors, you know, we got partnerships signed with the likes of ACI, BPC, OpenWay, Compass Plus, you know, it's fantastic. It really is fantastic. We had a call with OzPayNet the other day. It was great. We're talking about a discussion around how we can be approved for use in Australia, because their standards don't really meet with how we do things at the moment. So we've got to go through that process. But again, it's great that they knew all about us. They'd heard about us. So for this small business, through Jade, through our PR agents, through our work, and through our talks with other industry organizations, it seems our reputation is fantastic.
It certainly does, and look, I couldn't be more excited for you. I feel buzzing to get the next 6 months away and see what's going to happen to the business next. It's exciting times. It
is strange. LinkedIn's a great thing, and I keep having investment organizations reach out to me going, "Can we have a call? We've been watching your business. We think it's fantastic, really interesting." And I go, "Yeah, we'll have a conversation." And the first thing they say is, you know, "Well, we only invest in businesses really who are looking for 60 million plus." And it's like, I'd love it, but you know, I don't think I can spend 60 million, not unless I look at the car market. But you know, it's a bit odd. They're all excited by what we do, but we just can't use 60 million, I'm afraid, yet.
Step by step.
That's really good. One day soon now.
Well, listen, it sounds like everything's in line to do that. You mentioned there some of the banks and the momentum that'll build. You mentioned fintechs. For people who are watching this at the moment, John, who should be reaching out to you, and who can you really help at the moment? Who should pick up the phone and have a chat to yourself and the team?
Well, certainly any fintech who is starting up, and there's one critical factor that we haven't touched on here, which I should have mentioned earlier. You know, currently the world's biggest vendor in the payment HSM space is Thales. Thales now owns Gemalto, so I think it's now called CPL. Gemalto used to have the SafeNet Luna product, which was in the payment space. So one vendor now has probably high 60s, if not 70% of that market. As of last year, Thales announced the end of life of the current product, the PayShield 9000, and that went end of sale, I think it was June or July this year, and it goes end of support in December 2022. This is a cyclical thing. So every user out there in the world now has to move to get rid of the PayShield 9000 and migrate onto the new platform.
Yeah.
So our message to them is, if you're looking to make that move, come talk to us. Do you really want to throw those boxes away, go out and spend up to X million pounds on more boxes to do it all over again? Or do you want to buy in a service from us? Doesn't have to be all of it. And don't forget, big financial organizations under PCI rules, it's not just about your live environment. It's about your test and development environment. You can't mix the two. You have to have separate environments, separate boxes. It's about your DR. We can help out on all those things. We can offer a DR service. We can offer a test and development environment for them, or even a live environment. So any existing users of PayShield 9000 who are looking to make a migration, come talk to MYHSM and see if we can do something better for you. And obviously the fintechs we've spoken about, for me, that is an absolute no-brainer. If you want to do it properly, you want to stick by the rules, you can't do it anywhere near for the cost of the service we're going to offer you.
Well, listen, I'm ready to sign.
Good man. I'll send you the order form over.
And hopefully there's plenty there out who've been watching this and enjoying it as much as I have, who are keen to get involved as well. Listen, I wish you the very best of luck with everything. It sounds super exciting. I can't wait for you to set up in Florida. We can go out there and play some golf and get back on those airplanes. And
great place to be.
Use some of the T&E as well.
Yeah.
Get that fired back up. But John, it's been an absolute pleasure. Lovely to hear of a business doing so well, and your story and everything that's involved in it. Thanks for giving us that insight, and thank you to everyone who's watched, and we hope to see you soon on another episode of Fintech Focus TV. John, thanks so much.
Thanks, Toby. It's been a pleasure.